Hey there, Tim from Alpha Wolf Trading, wanting to thank you for stopping by to watch this interview and also make it clear to you that this is not a paid-for promotion. I collect no compensation for the interviews I do here. These companies have been identified as opportunities for investment that could provide an above average return on our investment. This is our opportunity to get to know management, to understand the vision for the company, the strategy they plan to implement, and execute to achieve that vision for the company. So if you learn anything here today and you enjoyed the interview, please do us a favor and subscribe to the Alpha Wolf Trading YouTube channel. Hey everybody, Tim from Alpha Wolf Trading coming at you with another follow-up from one of my favorites, companies and founders, just all around good guy. Jeff Thramann, thank you for coming in and giving us an update. The company, I mean, there's several companies that Jeff is involved in, but this one today is Auudia and Faidr, the Faidr App, and perfect timing. So Faidr App, and they gave an update today. I wanted to see if Jeff could share that with my viewers and maybe go into get a little bit of color. So Jeff, thanks for coming in and giving us this update. But you had some really great news, I thought, this morning.
Yeah, it was a pretty comprehensive overview of what we accomplished last year. It was a big year for us. We put out a lot of milestones that we thought we would achieve, and we hit all of those, exceeded expectations that we had set, prior to some of those milestones on our major launch of our product, really along the lines of the cost per install and the number of MAUs we could drive. And we've continued to optimize that process throughout the year. So the big news that we put out is essentially that we're moving from a pre-revenue company to a revenue generating company for the first time. And we're subsequently put out guidance for 2023 and really drilled in on the key metrics that we need to see our users hit to really drive the company. And, a big takeaway there was the significant improvement that we've seen in those metrics since we did our launch in February through the optimization process that carried on through the second quarter, the third quarter, and into the fourth quarter now. And now we feel comfortable enough on those improvements to really correlate that to what we're going to do on user growth and revenue growth for next year.
Okay, so the one thing I want to, you had this slide in your presentation today. The one thing I want to really highlight is the company has done everything it said it's going to do, right? You've publicly said we're going to do this, and you've held those timelines, and you've done what you said you're going to do, right?
We're very thoughtful about what we put in our press releases, and we tell our story through our press releases. And what we try to do is we explain where we are with our product and the development cycle. We tell investors where we think we're going and what we're going to achieve over the next quarter or two, and what the big milestones are that we're working for internally. We put those out there, and we put in a big effort to make sure that we hit those to drive this credibility. And we had a very successful year last year doing that. We did it on multiple occasions, and we were able to hit everything that we said we were going to do. And it was actually on this podcast where you and I were talking about the market conditions and the fact that we were going to need to raise some financing. And that was somewhat obvious. And the markets are obviously terrible for companies, especially microcaps, going out trying to raise capital. And one of the things I said on that podcast was that we were not interested in raising capital in these markets, or at least equity in these markets. And we were going to try to secure debt on reasonable terms to push us further down the road, give ourselves more runway so that we could execute on our plan and respect our equity. because it's hugely important. I lead from the front on that. As you know, I had a significant investment in this company pre-IPO. I bought another $4 million at the IPO. So I'm aligned completely with my investors. So we're trying to drive that credibility. We're trying to be a company that people can understand. We're going to respect that equity. And we also made those announcements today where we did put in place a $2 million debt line or term debt, which is going to get us, halfway through next year, which coincides with some key metrics that we're putting out. That debt came from an inside investor, another guy who's got a lot of money in this company, somebody I've known for 35 years. We went to West Point together. So it was nice to see him step up with that and provide that. And obviously no dilution on that other than some private warrants that he received for that, but warrants that were priced at 150% of the closing price of the stock. And he does have we don't make any payments on that debt. He has the option to convert the AUUD, which was 10%, and that interest rate into equity. But again, not at any discount, at the price of the stock when we close. So very good terms for us. We can also extend it to 12 months with another warrant slug. So being very respectful of the equity. We did put an equity line in place, but again, only 1.5% on commission shares there. And we tied those up to where they can only bleed out and no more than 10% of the daily trading volume. So outstanding financing for this marketplace puts us in a great position with access to potentially up to $12 million and allows us to execute on our plan, which we laid out for next year, particularly the first 2 quarters, and then reaching a big transition point at midway through.
Okay. Let me back up real quickly in case anybody isn't familiar with the Auudia story. Essentially, it is an app that takes your AM FM radio station and makes it more like a customized personal experience where you don't have to listen to commercials and you can still hear your local content. You can hear your local DJ, you can hear your local news, but you don't have to hear the commercials. You can put in place, you have different options actually that you can put in place, right?
That's exactly right. Basically, the way to think about it is you get complete control over the AM FM listening experience for the first time. So you tune into your station like you normally would, you listen to it, you don't like what they put in front of you, you can skip it, and our AI automatically detects the ad breaks, and we just cover that with additional content. We typically will cover with whatever content we typically play on that station. If it's a music station and you listen to a rock station, we'll give you rock songs, but you have a whole slew of choices that you can pick to listen to.
Okay. So you started out, your goal, I think it was in February, you had the goal of giving some numbers of how the uptake was of the app, right? It was that in February?
Yeah, well, it's interesting. It was actually last February on this day that we had our first management call as a public company. And our big call out on that day was that we were going to launch our app nationwide on February 15th. And that's what we wound up doing. We launched this year, February 15th, 4,500 stations on the app, just the music stations active. We weren't doing news, talk, sports at the time, but we hit that target and we got it out there. But not only did we get it out there, we also defined what would be a successful launch. And this was critical because we said that we needed to drive a cost per install of $5 or less and try to reach 10,000 MAUs on that second quarter spend for this to be successful. Because if you launch a consumer facing app and nobody responds and nobody downloads it and your cost per installs are too high, you're done. It's game over. So we wanted to clearly make that statement and say, hey, this is what defines success. And we didn't have a lot of input as to what that was going to do. But then we did report those second quarter results and we were able to show that we drive that cost per install under $3. So really did well against that $5 target. And we were able to drive 40,000 MAUs instead of 10,000. So that was a big, big point for me, as a big investor in the company, because it was at that point that we really realized, okay, people like this, people understand what we're doing, they're hearing the message, they're downloading the app and they're using it. And then from there, it was a matter of optimizing those use metrics, which is what we spent the rest of the year doing.
Okay. And so optimizing the use metrics and then introducing new features, right, to the product.
Absolutely. That's all part of it, and really drilling in on our target audience, right? Because we're trying to be very efficient with our spend, which means we really got to target folks. So historically have talked about our target audience being anybody who listens to broadcast radio. There's 240 million people who do that, and anybody who has a subscription to an audio platform. It's about 120 million people paying for audio platforms right now as subscribers, and that's still our audience. But we're drilling it down a bit in the early days, because if you think about it, what we're doing with this AM/FM app is we're targeting people who are listening to AM/FM radio, and they're listening on the stream. So that's really the target that we're going after. So there's about 76 million of them right now. Eventually, everybody who's listening to radio is going to be on the stream, because we believe the tower ultimately goes away, and that's what all the data shows right now. But when you listen, but we also can only really address right now people who are listening on a mobile app, right? That's because we're a mobile app, so you can only listen on the phone. So that audience is about 8 million folks. Now, as we expand into the car, which is something that we're going to do this year through integrations through Android Auto and Apple CarPlay, then we expand that 8 million audience up to 38 million of those streamers. And then eventually add desktop and start integrating into smart speakers and those sorts of things. And then we reach the full number of people who are streaming AM/FM radio today, right? And that's about 76 million. But again, we think that's going to drive all the way up to be 240 plus as the tower goes away.
Okay. So let's look at, and you've got some comparisons of people that are playing in your field, right? I mean, your true competitors, right? And that's iHeart, TuneIn, and Odyssey.
Exactly. These are platforms that are aggregating AM/FM radio stations. So people on these platforms are listening to AM/FM radio through a stream, right? So this is the perfect target for us, and they're typically doing it on their phone or in their car. But this is what we're going after first. And you can see that from a product strategy point, we're basically reaching parity with these guys because we're adding in our podcasting capability and we're adding in exclusive content. But where we win here is on our differentiation. And that is that we're the first group to aggregate the entire radio dial. So when you go to iHeart, you get iHeart stations, but you don't get Odyssey stations. You go to TuneIn, you don't get Odyssey stations. You go to Odyssey, you don't get iHeart stations. So consumers are kind of stuck in the same problem we have right now with the video streaming platforms. You never know what shows on what platform, and you're subscribing to this, getting rid of that, doing all these different things. We solved that. We're the first people to aggregate every radio station that's out there. And then we layer in our AI and we make it ad free. So these are big differentiators from what's out there. So we have everything that they have, and then we have this additional content, this additional capability. So that's where we think we win here.
So let's talk about some of the new features that you guys have brought on. You brought in the one I really like was Discovr, right? That's for the local artists, unsigned music artists, right?
Yeah, these are independent artists. We announced that last year when we activated the Discovr program. We did that in conjunction with 30 independent artists that are unsigned. And what they do is they're looking for distribution. So they put their new content, they give it to us, and we're able to integrate that into these radio stations where they think the audience will respond well. And our hope is in the future that we're going to have radio programming folks on the other side looking at this, discovering how their audience is responding to some of these new artists, and then actually spinning them on air and giving them that big discovery that's still out there. We think this is something that can be monetized tremendously. I mean, distribution of independent artist music is the fastest growing segment of music right now. And everybody's looking to how do you break onto radio? I mean, we have a platform right now where artists are paying money on these other platforms to try to build their careers and get discovered. I mean, what is it worth to get access to the best radio stations that are gonna work for your music and get data back on how those audiences are responding, and potentially get that data in front of the radio programmers to get spun on air. So that's a monetizable program. We do not model that into our revenue yet. We will once we build our audience and get bigger, but that's a great content play right there for us. It's free content that we can deliver right now, so we don't have to pay. And this leads to a big differentiator for us in this space, which is margin, right? We lead with two things: differentiation, so stuff you can't get anywhere else. That would be, AM, FM radio listening in a premium environment. Just doesn't happen anywhere else. And margin. And margin is really what everybody's hunting for. And this I'll extend even to the music players, right? The Spotifys, the Apples, the Amazons. Nobody makes money in music. So they're all trying to diversify. So we're moving from just these standard players to what's being called audio super apps. And that's really the market that we play in. It's this audio super app space. All of these music players, they have to, most of their money goes to the music industry for rights. So they can't make any money. And Spotify has over 200 million subscribers. They still can't make money. So in an effort to find margin, they've gone into podcasting. They just announced recently they're going into audiobooks. But what they haven't done is gone into AM, FM radio. And AM, FM radio is still the number one thing that people listen to from a time spent listening perspective, more time on AM, FM radio than any other source of
It's still
audio.
the 800-pound gorilla.
Exactly. And nobody has it in their platform. So we're starting to move into the super app space. So we have the AM, FM radio component that nobody else has. That's our differentiation. That's our margin. And we're adding in podcasting. And then we're going to differentiate on podcasting because we have a separate app called Vodacast, which is in the podcasting space, kind of taking podcasting from 1.0, where all you do is listen to the podcast and that's the end of it, to making it interactive. So we're leading from there in the super app space. And then eventually we're gonna start adding a music player. I mean, my team can go out and in 6 months build a generic Spotify. There's nothing new there. It's just it's commoditized. So we can add that. We can add audiobooks. We can add other forms of audio because we're coming at it from the standpoint of differentiation and margin. Now, the rest of the industry, they have to find that differentiation. They have to find that margin. And where are they going to find it? Right? There's nothing out there. That's hard to do. It's not hard for us to go from where we are to building a generic Spotify and going after this commoditized stuff.
That's got to make those guys feel pretty good, huh? Comforting for them.
Well, comforting for them, or, they might be interested in what we're doing as well.
All right. So let's see. What else do we have? We got switches. Okay. So AI identifies an ad, breaks and switches automatically, allows high value local content to play, DJs, concerts, festivals, weather, all that stuff. Right. I mean, from the moment that I met you, this made so much sense to me. I mean, from the moment that you presented it, I thought this was absolutely a brilliant idea, right? So let's talk about, so you launched the app. What's the conversion from free to, they become a subscriber?
Yeah, so there's a process there. We had a slide on that, which really got into the metrics. It's a little further down in the deck. But you can just keep going and I can show that to you, or I can just talk to it because I know it anyway.
Where is it at?
Keep
Which
going
one?
and I'll tell you when
Okay.
you're there. It's really close to the end. It's right there. One up.
One up?
Yeah,
Got
right
it.
here. Yeah, so these are the key metrics, right, that we've really been optimizing. So when you can see when we first launch where we are on a cost per install basis, you can see where we are on retention. And then you can see the progress we've made over the last couple of quarters to really drive that, right? And then you can see where we think we're going to be mid-year. And when we get to those numbers mid-year, that's where we start to get a less than 2-year ROI on our advertising spend. And what's huge about that is when we can do that, we can start financing that with a line of credit, right? We don't have to sell equity to bring in capital to drive the bottom line. which is going to be, or the top line revenue, because revenue is directly related to advertising spend. Because the more we spend, the more users we get. This is what cost per install is all about. The more users you get on the free platform at first, the more subscription conversions you get and the more dollars you get. So that's the whole key. Having a short ROI there allows you to finance the growth with debt so you can respect the equity. So this is really what we've been putting out. And if you go to the next slide on this, you see where this really ties into the revenue guidance that we were putting out there. Because you can see in the first 2 quarters, our ad spend isn't really that significant. And the reason is because those metrics that we just went over aren't where we want them to be yet. So we spend the first 2 quarters very smartly continuing that process of optimization to drive to those mid-year numbers, those metrics that are essentially an inflection point. Once we're there and we're at this 2-year ROI return on our invested dollars for the advertising spend, now we can open up the spigots and really start driving users. And you can see what happens to our spend. We're going from a couple $100,000 a quarter driving up to, into the $3 million range. And we can keep going as we prove that. And we can do it without burning equity, right? We can do this off of a line of credit and just finance our way to pretty significant growth.
It's a nice looking graph right there. Nice looking chart. I like the slope on that.
Well, it's fantastic. And listen, you take that $3 million and you drive it up to $6 million spend and that slope doubles, right? So it's a math equation at that point. The key is being able to finance it without continuing to have to sell equity.
So what are the, I mean, I have to assume you're pretty happy with all the metrics so far.
We're happy with the metrics. I mean, the metrics are what the metrics are, right? I mean, we'd love to have a 3-month ROI on advertising. We're not there yet, and we're not saying we're not going to get there, but we're saying that at 2 years, that's where you have this kind of transition point where you don't have to lean on your equity to raise capital, right? We can start financing that with a line of credit and just have that churn out, and we break even. If we can finance that with debt and it takes care of itself, I mean, we essentially break even at about 80,000 subscribers. That's at our current cost structure. That's the power of that margin that I was talking about in those previous slides. We have significant margin because when we deliver content, so when Spotify delivers content to a user, they're paying for 100% of that content that they deliver. When we deliver content to a user, we only pay when we're covering those commercials or when we're responding to a skip. And then half the time, the content that we're delivering is free. If it's independent artists or something else, we're not even paying for it. So our margins are phenomenal compared to everybody else in the space.
So I would think people are going to ask, wait a minute, well, if they have to pay these royalty fees, how come you don't have to pay the royalties fees?
Well, because we're not an on-demand music play service. That's the whole difference. The music streamers are essentially like your old library, your music library that you used to have. Instead of you having your CDs and your vinyls or whatever, now you just have it all on your phone, and you can play whatever you want whenever you want, right? It's you choosing to do that. Requires a direct relationship. With us, what you're doing is you're listening to radio. Radio is already paying this content when they're pushing it out to their public URL. They pay according to a statutory rate, right? And what you're doing with our app when you download it is you're downloading a digital audio recorder and our AI model. So that digital audio recorder is very much like a DVR. So when you pick up your phone and you select one of those stations to listen to, all you're doing is connecting your phone to that public URL and you're recording it with our digital audio recorder, just like you would record a show with your DVR. And then what's happening is when you're playing it back with just like, let's say a 40-second delay, it's about how long it takes for our AI algorithm to work. Our algorithm is analyzing that playback. If it's something that you want to hear on that radio station, like local content or music, we let it through. If we detect an ad, then we have a DJ that comes on. It's a Faidr DJ, and they say, hey, we notice that your station has gone to ad break. We're going to deliver you some Faidr content. And then we deliver that content that we give to you, whether it's an independent artist or a regular song. but we have to pay for that. So that's the part that we pay. That's only during the ad breaks. That's about 16 minutes an hour. So about 27% of the time that we're delivering content, we're actually paying for that content. We don't pay that other 75%. The rest of them have to pay the whole time.
That's a pretty good model, Jeff.
It's a fantastic model, and it's completely underappreciated. And part of the reason it's underappreciated is we're just starting to get out to market, right? We're starting to put this out in front of consumers, but we're leading from this position of strength. This is what I talk about. We lead with differentiation. Nobody else has this. There are no competitors putting out AM, FM radio where you have complete control over what's going on, and we have the patents that cover the use of AI against AM, FM radio to deliver this product. So we lead with that. We also differentiate on the Vodacast piece, and then we layer in with the Me Too music players.
So let's talk about the Vodacast piece real quick. So that you're talking about, I mean, right now you've got this platform, which, you know, a lot of these specialty audio companies have now podcasting on top of their streaming, right? And they're starting to integrate that. And podcasting is becoming a really big thing. I mean, that is definitely a category that is growing, right? So you kind of look at podcasting as it's kind of in its infancy stage too, right?
Absolutely. And it's in its infancy stage, and it's really in this area we call it podcast 1.0. So if you're a consumer and you listen to a podcast, and that's the end of it. There's nothing you can do with it. There's no sharing around it. There's no interactivity. There's no social. There's no discussions with the host. That's it. That's all that happens. So we think there's going to be a podcast 2.0. And with podcast 2.0, you start to have some interactivity. And that's what we're building with Vodacast. And you can see on this slide, you know, one of the first things we built is when a podcaster goes out and researches their show, they're finding all kinds of content, whether it's text, video, images, whatever, but they have no place to put it. And we've built a piece of software that as they're doing that, they can tag that information and we automatically sync it to their audio. So it's just a flowing digital stream of the content that's relevant to the show. People don't have to go out and Google afterwards, you know, what the podcaster is talking about. It's all right there. And as they get eyeballs on that, and you can see that in this on the first shot of the screen, that piece on the top is what scrolls along. You can put digital ads in there. And now they have access to digital advertising, where right now podcasters can only make money on the audio ads. But then we also give the podcasters this opportunity to own some space in the app. And that's what you're seeing on the second image here. Here's where you can start having talkback features. They can sell merchandise. They can have their social stuff. They can start conversations. They can follow people. These are all the capabilities we're building to bring social into the equation. And then finally, we're layering in some options to make additional revenue. I mean, there's nothing that prevents us from using our AI to take the ads out of the podcast. So if you want to just listen to a podcast without having to listen to the ads, you flip it over to that mode, you make a 25-cent micro payment, and then you can listen without the ads. You want to listen to the ads, you don't pay the 25 cents, you listen to them. You know, so it gives a lot of flexibility to the platform. And that's where we're differentiating there. This is what we reference when we talk about podcasting 2.0.
Okay. I mean, if everybody's listening to this, I mean, how you don't see this as being a pretty compelling story, I don't know. I mean, we've talked about the financing. I mean, the markets have been shit especially for microcap space for 15 months, right? I mean, there are companies that are down 90% or more. And it's a lot of it is the function of the overall markets. I mean, we haven't seen a true bear market in nearly 14 years. And we've been due for one. I mean, this is a resetting. I like to call this a cleansing that needed to happen, right? And I'm not exactly sure that we're completely done with that. I think there's still probably another leg down, but you know, we'll see. But I do think that as you look at these companies that were able to not just survive, but kind of thrive through what we've been through over the last few years, which is, you know, COVID, pandemic. I mean, it's easy to forget about these things because they're behind us now. But you think about what we went through, there was some pretty crazy stuff happening, right? And then you go out through the COVID, and We come out of that and we head into a war that who would have thought that was going to happen? Supply chain issues and, all this stuff going on. Not the markets haven't been normal, I guess is what I could say, right? We've had a lot of interesting outside influences, a lot of uncertainty, and the market hates uncertainty, right? But I do think we're going to get through that. This too shall pass. And then once we do, you think about the companies that now we're not only able to survive, but we're actually able to thrive and grow their business. And I think you guys are one of those companies, right? How do things look when things really do start to normalize for you guys? And you continue to gain traction and introduce new products, right? And I mean, it's not like you're just out there looking to raise capital to fund this all. You got a plan, you got a strategy, right? And most importantly, you've proven that you do what you say you're going to do. You execute. And that to me is impressive. And it hasn't been rewarded. But I do think that if you continue to execute, at some point you will be rewarded and the share price will be rewarded. Would you agree with that?
Totally agree. And that's 100% our focus. Our focus is on execution. Our focus is on building trust with the investor community. And our focus is on protecting our equity so that that opportunity remains. And we like what we're seeing so far. We like the metrics that we put out. We like the trajectory we're on. There's still a lot of work to do, though, and we're going to continue to focus on doing that. We're well capitalized now to do that, and we think get us through these markets and get us to some significant inflection points that we put out there. And we try to be very transparent. That was a big thing that we did today, right? Increasing our level of transparency, opening up to what these metrics are, where they need to be to really have a business, and how we're planning on going after them. And now that we have the financial backing to make sure that we don't have to raise equity in this type of market, I think really helps us continue our story and drive to the next level.
Yeah, and I think as the story gets out and more people understand it, I think this could get, I think it could get really exciting. I mean, really exciting, right? I think you got an exciting product. What about sports? And is there any thoughts about like sports being involved at some point down the road for you guys?
Oh yeah, that's already there. I mean, we put some announcements out last year after we launched with just the music stations. One of the next announcements that we put out around the same time we put out the fact that we added Discovr was an improvement to our AI algorithm. That was specifically an algorithm and some changes made to address news talk sports. A little bit harder for the AI to know the difference on talk stations and news and sports stations between the content that you want to hear and the commercials. But we're solving that, and we continue to improve that algorithm. I think it was in sometime around July that we had about 10% of the news talk sports stations added. Then we announced in the third quarter that we reached 88% of all stations on that new algorithm. And now we're essentially 100% of the stations, but other than ones that we're continuing to add, right? There's always this delay where you have some that you're just adding. You got to work your way through those, but we're essentially there with all stations. And there's still improvements to go with the AI. 5 years ago, you couldn't do what we're doing at all. You couldn't even run an AI model on a mobile phone, right? And here we are 5 years later, we're running it on your phone. We're not draining battery life, and we're processing everything right there. And our business model is dependent on you doing it. It's just like the DVR model, right? The consumer is allowed to go out and record anything they want that's publicly put out there and use it for their own consumption. We can't do it. No company can rebroadcast or do that for you. So we're dependent on that model, and we were able to shrink it down. Now the AI is reaching crazy levels, right? And it's only going to get better. There's stuff they're doing in the research labs right now, making tremendous progress, where they're actually using AI to model the functioning of the inner ear, how the cochlea works. And as that starts to layer in, again, we'll be on the cutting edge of that. We'll be integrating that into our platform, and it'll only get better. I mean, right now there are going to be some mistakes when you get this, there's going to be some ads that come through. You can simply manually skip them when that does happen, but that will get better and better and better over time.
Right. The AI just gets smarter and smarter.
Smarter and smarter, exactly. But we're early in this. We have broad IP, and we continue with patents. And remember, I mean, this is an area that I specialize in. I'm the named inventor on somewhere north of 130 patents. So we're very sophisticated with this strategy, and we keep these going. So as new things come, they're just going into our continuation parts, and we can build out this moat, pretty large.
So listen, I just want to highlight something here real quick for those that may not be familiar with the story or may not be familiar with Jeff, but Jeff's one of my favorite characters, man, because this guy, one of the smartest guys I think I've ever met in my entire life. A serial entrepreneur that loves to solve problems. Would you say that's accurate? You love to solve problems.
That's what drives me.
So West Point grad, we talked about that earlier. Then neurosurgeon. Then from neurosurgeon to, I think you invented a product that you wound up selling that the spinal industry uses, right?
That's right.
Invention there. And then you get into the next not logical step, which is artificial intelligence for the radio.
Yeah. Been an interesting ride.
Yeah, it's been an interesting ride. But one thing is for certain is that you're driven, man, right? You're driven. I mean, you figure out solutions, and then maybe everybody else doesn't catch on real quickly, but a lot of people say it can't be done. I think you're one of those guys that's like, don't tell me it can't be done. You're going to prove that it can be done, right?
Absolutely. And it makes a ton of sense, right? I mean, you talk to people who listen to the radio, and a big thing we hear is, well, people don't listen to the radio anymore, but that's people's opinion, right? The facts are way different. People spend more time on radio, and listen, radio, and as great as podcasting is, and as fast as it's growing and everything else, I mean, radio is generating, $15 billion a year in ad revenue in the US. Podcasting just crossed 1 billion, right? It's not there yet. Local content is what people want. Radio owns that, and people go there to get it. But the ads are a nuisance. And in today's day and age, you shouldn't have to listen to them. So now you get the best stuff that you want, and we take away the ads. It's really not that complex. I mean, the technology is complex, it does it. But the concept from a listener and a user, okay, I can listen to my station, and when the song that they have on there, I don't want it, I can skip it, okay. And when the ads, I can set it so I don't have to listen to them at all. Great. So it makes total sense. And we're just pursuing it and continuing to build it out.
Right. It's an exciting story. So listen, I'm going to back it out for a second. Anything that I missed, Jeff, that you want to highlight here?
No, I think we went over the big highlights of what we talked about this morning.
Okay. So look, I want to point out the chart. So, the chart looks like every other chart out there in the microcap world right now. I mean, it hasn't been a fun ride, but I will say this, actually over the last, it's actually kind of just consolidated. It hasn't had the huge drawdown. It's just kind of consolidating, right? I mean, for the last several months, we got August, September, July, August, September, October, November, and you actually just today broke out of this consolidation area. Now, this might be an after hours blip, but you're right up against this area of resistance, which is about $1.60, and that's where it says you closed today. On my chart here, it says $1.59. I'm not telling anybody to buy the stock. That's not what I do. All I do is present the facts and follow up, and the companies that I think at some point are going to make their shareholders money. I mean, that's really who I interview. I interview companies that I think are going to eventually make their shareholders money. Do I know exactly when that's going to happen? I don't. It always takes longer than I think it's going to. But I do have a good sense of who, leadership is a huge part of it. Having a plan, having a vision, strategy, all of that is huge. And I look at the technicals to help me identify if I can put the good story and the good technicals together, that can be incredibly explosive opportunity and provide some incredible returns, right? So long-term chart from the upper left to the lower right, not a great thing to see. However, if you look at this chart, that long-term trend has been broken to the upside. And I think that we're going to continue stair-stepping, and as people get to know this story, how many shares do you have fully diluted outstanding, Jeff? After,
I think we're about 12.5 million right now.
Okay, 12.5 million. So everybody knows, it may sound like a lot because it's million. That's nothing. That is literally nothing. Anything under 100 million shares, I view as a thin stock, right? So 12 million is like uber thin, right? But so what does that mean? It means that it wouldn't take a whole lot, a real significant development to send this stock on a pretty good move with only 12 million shares in the float, right? What's the average share? What is your average trading volume per day? Do you know? But
well, it's been hovering only around 25,000 for the last 3 months or so.
Okay.
But we have crazy days, probably like everybody.
Right. I mean, you have had some big spikes in volume, right? I mean, you've had some massive spikes in volume. What is that? 16 million shares traded hands. That's spinning that float.
It's like 5x in a day.
That's fantastic, right? But that's what can happen when you have a significant news announcement, right? A material news announcement. And that's what happens with small float stocks. If you don't want to buy it, and I will just tell you this, the stock is a little extended here, but if it does manage to stay above this 160 area, I think that becomes your new floor of support, right? So that could be a good entry spot for somebody that wants to start building a position, if that becomes the floor. If it doesn't become the floor, thing goes back down to a $1.20 or $1, I would say that's a gift to when you went public. Where did you buy shares? The $4 million that you put in yourself, where did you buy shares at, Jeff?
That was 4 1/8.
Okay. Right. So, I mean, you got skin in the game, right?
Oh yeah. I got big skin in the game.
Yeah, big skin in the game. And I like to see it. And I do think eventually, Jeff, you're going to do well. So if you don't want to buy the stock, you've got the investor relations that you can go sign up, get their every news release that they send out, every SEC filing is going to get delivered to your email. Pay attention to the stock, put it on your radar. That's what I would suggest. And then, Jeff, when you have some new developments, anything significant, we'll have you back. We'll do this again.
Okay, great. I appreciate the discussion.
Okay, man. Hold on one second. I'm going to shut this off.
Okay.
Hey there, all you stock market junkies. Thanks for tuning in to another founder interview here at Alpha Wolf Trading. Today we had Jeff Thramann, and the company was Auudia Inc., ticker symbol AUUD. I hope you enjoyed today's interview, and if you did, please do us a favor, give us a like. How about giving us a share? And while you're at it, why not give us a follow? Until next time, stay safe. Alpha Wolf Trading wishes you the very best of success.